Morning, and here are your top 5 stocks to watch out for in trade today. Well, let's begin then with ICICI Bank. Well, the RBI has gone ahead and exempted ICICI Bank from the Banking Regulation Act 1949. This is the exemption for the shareholding of over 30% in ICICI Lombard General Insurance and ICICI Pru Life Insurance for a period of 3 years till September 2023. Meantime, let's watch out for HUDCO, which came out with its quarterly numbers yesterday post-market hours. Well, a profit of 203 crores versus 333 crores is what they delivered on a year-on-year basis. The calculated NII, well, it was a little bit flat, slightly lower on a yearly basis at 563.5 crores versus 587.2 crores on a yearly basis. The provision stood at 247 crores versus 19 crores sequentially, so a significant elevation, and even on a year-on-year basis, the provisions were elevated. This is versus about 5 crores YoY. Disbursements came in lower at 2,285 crore rupees with the year-on-year figure 3,839 crores, and you had the GNPAs which stood at 4.3% and the net NPAs at 0.5%. Meantime, we also had PVR, which came out with its numbers, and do remember multiplexes have really borne the brunt of this lockdown with virtually zero revenue since they've been completely shut. So no surprises to see a loss this quarter for PVR at 225.7 crores, and do remember the company is declaring its numbers at the fag end of the earnings season, not on the day that it was set to declare its quarterly numbers. This is versus a profit of about 17.5 crore rupees. There was an EBITDA loss of 116 crores versus an EBITDA of 278 crore rupees. Revenue from operations as well shrunk significantly, a meager 12.7% versus 880 crore rupees. In fact, the company has said that the COVID situation has adversely affected the operations of the group. That's resulted in almost no operations in this quarter. They're still waiting for some sort of directives and guidelines from the government on the opening of cinemas. They've taken several cost-saving measures in order to mitigate the adverse impact. They've reduced their employee costs, taken temporary salary cuts, a headcount reduction, a waiver on rentals, maintenance charges, and they're trying to bring down the cash burn significantly due to the lockdown. Meantime, Divi's laboratories in its AGM had some key takeaways. They say that the India API industry will benefit from the global customer shift away from China. They're also saying that the good visibility on custom synthesis business per management, biologics investment will happen at an appropriate time. The global market leadership is on 9 molecules and 8 internal approach to sustainability, and 8 production blocks in Vizag and 10 new production blocks in Hyderabad is what we can see. Apollo Hospitals came out with its earnings, a loss of 226 crores versus a PAT of 49 crores. Margins at a meager 1.6% versus 14.1%, and revenue from operations not too bad at 2,171 crores versus 2,572 crore rupees.